Hey, good morning, guys. Welcome to VA Fridays. So today we're going to do a quick true or false question in regards to VA loans. So the true or false question starts off with, there's a DTI cap on VA loans. True or false? All right, before I get right into it, I'm going to do a quick dad joke. So dad joke is, what did the full glass of water say to the empty glass of water? And what did the full glass of water say to the empty glass of water? You look drunk. Beep, beep. All right, so getting right into it. So true or false? What do you guys think? True or false? There's a DTI, debt to income ratio cap. Like there's a debt to income ratio for VA loans. The answer is false. The answer is only true with certain specific lenders. So here's how it all works. Keep in mind that everything's written from the VA lender's handbook. The extra requirements that lenders may have on top of what the VA allows is something called a lender overlay. So the VA lender's handbook states no debt to income ratio cap. So for example, a debt to income ratio, if you guys don't know, is basically what percentage of their income is going toward the future debts as well as the mortgage payment. For a lot of loans like conventional FHA, they do actually have a debt to income ratio cap. Around conventional is like 50%, FHA is at 55%. So that means to include the future mortgage payment and all the debts on your credit report, you cannot go past 55% of your income for that loan. Now, there's been a lot of situations where clients have been told that their debt to income ratio is too high, and that is a thing only for that specific lender, which means that that lender has a cap on their VA loan when it comes to debt to income ratio. Again, that is a lender overlay, not a VA home loan lender requirement. So if your client is being told that their debt to income ratio is too high, that just means it's too high for that specific lender. It doesn't mean they can't get a VA loan. It just means they can't get a VA loan with that specific lender. Now, what's unfortunate is that this information can be presented in a way to say that from those people who do have debt to income ratio caps, that this information is from the VA, okay? And it's this is how the VA works, blah, blah, blah. It's not how that works, unfortunately. It's either they don't actually know that the VA loan has a debt to income ratio cap, so they're referencing FHA limits or conventional limits and thinking VAs follows the same limit, which it doesn't. Or they're saying it in such a way that so they don't look bad. Basically, they're trying to save face. So instead of saying, hey, we have a debt to income ratio cap, it's our fault, you can't get a VA loan with us, they're what they'd rather say is it's the VA's fault and they make the debt to income ratio cap. The VA looks at something different called the residual income limit. So what it looks like is it looks at the net balance of what the client is walking away with after everything's paid for. So essentially it's a net balance sheet, and this net balance of whatever's remaining after the future mortgage payment needs to be higher for the certain size of their family. So for example, if you're single living on the West Coast, you have to walk away with at least a minimum of $500 a month, which seems really low because that's basically a ramen diet. However, if you look at the gross income, subtract out the taxes, subtract out the credit report items, as well as the future mortgage payment, as long as there's a net balance of $500 or more, then typically it's still a green light, even if the debt to income ratio is over like 65%. So if someone is telling your client that, or a lender is telling your client that your debt to income ratio is too high, it's probably because they just can't get a VA loan with that lender. And a lot of lenders do have debt to income ratio caps. So be mindful of that. Be mindful of that. Who you're working with may have limits that aren't designed by the VA, but designed by the specific lender. So just give you guys some info there. Otherwise, that's all I got for you guys. Hopefully that gave you guys some good insight as to making sure you're sending your clients in the right direction. Otherwise, that's all I got. Have a good weekend and nuke out.